Today, here's a very interesting theme that we'd like to discuss. Being environmentally responsible, being more responsible to the social impact your actions tend to have, and also, of course, opting for those actions that are responsible from the corporate governance front. But at the same time, well, you've got to earn money as well, right? Enter the concept of ESG investing. One emphasizes on protecting the environment and sustainable development rising. The world of investment as well is catching up and giving rise to something called as ESG investing, which, like I said, stands for environmental, social and governance investing. In fact, I have with me my colleague Pankaj Podar to tell us about what is the trend. Are investors all over the world moving away from those companies that are having a negative ESG impact? And also, does it mean for India? And what are the opportunities available for individuals like you and me? Take a look.
Well, when we look at ESG, it's a term which is used in the financial markets quite heavily these days. ESG refers to as a style of investing, and this is referred to as sustained investment. That's what is this referred to. So ESG has a full form, and we can look at that. It basically means that investing via environment, social and governing standards. That's essentially what this means, or that what investing or ESG stands for: environment, social and governance. Now, when we talk about ESG, there has been a significant rise. What does this essentially mean is that there is a positive long-term impact on society and environment when you look at investing, and that's what it looks to achieve. Now, when we talk about, recently, some of the annual letters by big players from BlackRock, like Larry Fink, says that climate change, which is a part of ESG, is a defining factor in companies' long-term perspective. They believe that ESG investment value-based ETFs have surged in 2019, and they also see that consumers as well as institutions are focusing incredibly on ESG. So that's what they are looking at. When we look at what's happening in terms of investment, in 2005 it was as small as 178 billion. In 2018 it's about 11,600 billion. That's the size of assets under ESG. Now, when you talk about ESG, there are certain defined criterias, and when you look at these criterias, the most common ones are the top four are climatic changes. That's something which they very actively look at. Tobacco worldwide is something which is known to be a ESG negative. Then you have conflict of interest which comes in, and then also anti-corruption and how much of transparency is there, and that's what this focuses in on. We've done some analysis on a few names which come on top of the mind in the Indian market, and when you look at the Nifty returns, that's the 5-year return, 3-year return and 1-year return. And now let's look at some of these stocks and how they have done. Coal India, that's a negative 45%, a negative 28 and a negative 9. This is one of the ESG negative companies that we're talking about. NTPC, only 3% and about as flat as it could get in terms of this move. United Spirits, down about 13%. ITC, just up 1%. Remember, it's a heavy weighted stock, but the stock weightage has come down. Then we look at FII holding, or FIIs have refrained from investing into them. ITC FII holding, the latest one, 15.8, its lowest since June 2015, declined for 9 straight quarters. Coal India, similar levels to 2015. So assuming that 5 years money has come in, the FII holding is as flat as it could get. Similar is the case with United Breweries as well, lowest since 2011. So some of these companies are facing the brunt of ESG investing and are not getting incremental flows, probably because investors are moving towards ESG style of investing.
Okay, all right. Well, that's some interesting analysis on how stocks that are not exactly ESG compliant, like Coal India or maybe even an IDC that does have a significant chunk of its revenues coming from cigarettes, have actually performed, in the periods gone by. But, ESG investing is not as small as one would think in India. There are, in fact, ESG dedicated funds as well. SBI is one such fund. Quantum as well as one such fund. But really, what exactly is the ESG way of investing? Let's bring on board Harsh Jain, the co-founder and CEO of Groww, which is essentially an application that helps you invest your money purely through your mobile phone. Harsh, thanks so much for joining in on The Money Show. And, I would assume that most of your, most of the subscribers to your app, Groww, would be Gen Z, would be the Millennials. And they do tend to be a bit more conscientious when it comes to environmental factors, social factors, corporate governance factors. So when it comes to ESG investing, do you think that if I as an individual are a bit conscientious about the environment, is it difficult for me to find avenues that help me not only, grow money, make money, earn returns, but also at the same time be a bit more sensitive to these ESG factors?
Thank you, Mubina, for inviting me to the show. As you rightly pointed, that the ESG funds are gaining popularity in India. So the two funds that you mentioned, SBI, Magnum Equity, Quantum, are already there. There are a couple of other AMCs like ICICI, Kotak, who have filed with SEBI to launch this category of fund. In fact, SEBI's stand on creating a new category for ESG fund itself is a movement towards addressing the increasing awareness and the interest from the retail or the institute investors into such kind of companies via the route of mutual funds. Now, talking about the millennials, I think there's a lot of awareness around these things and social environment friendly things. They do participate in a lot of activities, but when it comes to investments, I think there's still some time for our country's investment opportunities to be available for them. Right now, the gap is there that they do want to do certain things, but there's not enough options, there's not enough education, like what kind of companies are actually qualifying as an ESG verified companies versus the others. That level of information is not available readily in a consumable form to the retail investors. So I think going forward, as I mean, the BlackRock's clear stand on it, and it's being very popular in this industry now. People are gaining awareness around it, and we are not too far from where people will start looking at it as one of the diversification in their portfolio, just to be sensitive towards the social part and the environment part of the country.
Okay. Harsh, not to sound insensitive of sorts, but till date, individuals do want to always, of course, look at their personal growth, right? That yes, it's great to look at the environment, etc. But at the end of the day, I have to feed myself, I have to feed my family as well. And plus, we know what's going on with inflation, right? I mean, almost a 7.5% inflation number. So I have to also keep up with rising expenses. So I think I must ask you this question. Are ESG investments lucrative options then? I know there's not much of a history because it's only, I think, in the last 6-7 odd years that we've actually started seeing a good amount of assets being allocated to ESG. But yeah, are they lucrative for individuals?
So as an individual, they're not lucrative in the sense that expense ratio of these funds will not be any lower than the similar category funds, or you cannot expect higher returns coming just because these are ESG funds. But having said that, I agree with you that people, if they're struggling with managing their expenses from whatever they're earning, just making the ends meet, they will probably not diversify their portfolio into such funds just because just because it's an environmental safe or social impacting companies. But I have seen, interestingly, very high interest in people, and especially the millennials and the new generation who are living in metros and working with all the large companies. They have started investing not just time, even part of their money in impact investing or donating to the charitable funds or helping social service. So when people are proactively acting towards that in different ways, of course investing will also come to that level field, and when people are more aware about these things and these options, they will definitely participate into it.
Okay, all right. So basically, as investor interest increases, there will be more participation, and that in turn would sort of, make these options more lucrative. Now, how does India stack up, in the ESG benchmarks? We do know that the Western world has taken leadership when it comes to reporting as well on ESG. I mean, you open an annual report of a foreign company and they'll have all the appropriate ESG disclosures. In India as well, ESG disclosures have been rising steadily. I mean, if you'll open a Tata annual report or an HDFC, a Birla annual report, you will see a good chunky amount of disclosures in the annual reports. But, apart from those big corporates, do you see good ESG disclosures by other companies in India?
So rightly pointed. So the level of disclosures and the transparency of the information is not probably as high as the developed countries, because there the regulations have been more stricter for these things. But of course, every company is disclosing. There is a level of understanding also how these are interpreted and how these are positioned. These are communicated through the financials and the annual reports. But there's still some time to come. You have to see how the country, our economy has evolved. Right now, we're just coming out of a phase where we're not just called developing, we are actually being looked at as the opportunity place the one of the most sought after economy to invest in. So there has been a trend, and we are seeing how developed countries have seen that trend. People are becoming more conscious, talking about it, asking for these details in the annual statements. I think the similar requirements will follow from the institute investors, from the regulators, from the individuals, and we'll see more and more transparencies in these declarations in the annual reports and other financial documents. Yeah.
All right, fair enough. Harsh, is there any risk attached to ESG investing? I mean, we do know that equity markets carry their own set of risks, etc., systemic, unsystemic, so on and so forth. But for ESG, is there any specific risk that is peculiar to ESG that individuals should be wary of? Or if I have to put it differently, what sort of individual profile is an ESG investment apt for, and for which individuals is it not apt for?
Sure. So first part, I think is, so the way to look at ESG funds in short term, if you look at those funds, then you will see they are more focused funds. So they will have lesser diversification as compared to say a multi-cap fund where there will be companies from any background or any ESG numbers, but they will still be diversified purely based on the performance or the potential of getting the returns. But if you look at long term, like really long term, not just 5-7 years, maybe even longer term, then you will see the whole fundamental belief behind the ESG philosophy is that these companies will be better in terms of sustainability. These companies will fare well in terms of their performance over time and being there, doing good performance. So in there, we haven't seen that much data in India, but if it's considered in a very long term, there can be an advantage with the ESG funds itself as a performance. But in a short term, they are on the contrary, little higher risk because of the focus, because of the less diversification, because of the higher expense ratio which is attached to it. That is the way to look at it as an investment opportunity. Now, the kind of investor who should look at, of course, there should be a motivation from inside to participate in these kind of activities, to invest in the companies, encourage those companies to work towards better, environmental, being more responsible towards all the environment, social, and the governance aspect of the country and world as together. Definitely, there should be an intent to do that. But from a purely financial and investment point of view, I think if you are doing a core portfolio where you're doing your investments based on your goals and you've allocated your assets towards matching, getting the goals, then a small part of your investment you can look at doing in the ESG funds, and then going forward you should look at how your performance is happening, and accordingly you can diversify it further.
Okay, understood. All right. So, folks, there you have it. That's, the kind of individuals for whom an ESG asset class would be suited. So, if you want to do your bit for the environment, you could consider this as an investment option. Of course, it's still extremely early days. Like we mentioned, a lot of Indian companies are not right up there when it comes to ESG disclosures. Yes, it's not absolutely at zero as well, but we're getting there. We're getting there close to, making the adequate disclosures that will meet the ESG benchmarks. Not just that, I mean, ESG funds as well. At this point of time, I think there are just 2 funds, if I'm not mistaken, Harsh. So let's get straight to business then. If I, as an individual, want to invest responsibly, want to invest within those parameters of ESG in companies that don't have a negative ESG impact, what are the options available to me?
So from a mutual fund point of view, there are 2 funds. One is the SBI Magnum Equity Fund, another is the Quantum ECG Fund. These are the 2 funds, and there are a few more funds which are in pipeline, which will be coming as an NFO in some time in future. That is one way. Another way is the stocks, the companies themselves. You can directly invest in the stocks. You can obviously do your own research to find the companies who are qualifying. You can look at these funds who have invested in the respective companies, because these funds are already regulated by SEBI, and the companies they are investing in are qualifying for ESG funds. So you can look at direct investing in the stocks, or you can do it through via these mutual funds.
Fair enough. Okay, folks. Well, on that note, if you have any questions or queries, if you want to do your bit for the environment, call in right now. The number is 24990300. You can also email us on themoneyshow@etnow.tv. We will be answering your queries right now, and Harsh Jain will be here to help you out with any questions or queries you may be having on your mutual fund portfolio. Okay, let's take on board our very first query. Shankha Sen has emailed into us saying that I'm 37 years old and have been investing in mutual funds since November 2018. So that's roughly about a year from now. It's been a year since he's been investing. He's started an SIP of 20,000 rupees per month, and he is going to increase it by 10 to 15% per year. He wants 40 lakh rupees after 10 years. That's basically in 2030, and he wants this for his son's education. So his son is only 7 now. He probably wants this money for his son's post-grad. Now, I don't know if he wants to go for an abroad education. I think he'll need a bit more than 40 lakh rupees, but he hasn't mentioned that. He also said that for his retirement, which is March 2043, he wants to accumulate 3.5 to 4 crore rupees. Now, can he expect 12 to 13% return from these funds till March 2043? That's his retirement date. Now, he has 5 funds: the Parag Parekh Long-Term Equity Multi-Cap Fund, the Kotak Standard Multi-Cap Fund, then he has an SBI Small Cap, and Axis Growth Opportunities, and a Mirae Asset Mid-Cap, 4,000 in each one of them. And I think he wants to add in one more fund, so he wants to know if the Axis Focused 25 or the SBI Focused Fund, which is the better one. He wants to obviously beat inflation when looking for returns through these funds. Okay, so 40 lakhs for his son's education in 10 years, and then 13 years from there, he wants 3.5 to 4 crore rupees, for which, for both of these goals, he's putting in 20,000 rupees per month right now. And yes, I think it's reasonable to expect 10 to 12% of returns per year, from mutual funds, from the equity markets. But Harsh, would you say that 20,000 per month right now is okay? He said he is going to increase it by 10 to 15% per year, but do you think this would be adequate? And also, what do you make of his funds?
Sure. So, Mubina, just looking at the selection of the funds and the amount that is being invested every month, I think with the 20,000 per month with a 10-year goal, if you just put in a SIP calculator and figure out, then you can easily make 60 lakh in 10 years. With assuming just the 10% return, which is a fair assumption looking at the inflation and the GDP expected over the next 5 to 10 years. So the first goal can be achieved within 10 years at 20,000 per month, that is increasing by 10%. Now continuing, if for the retirement, if he continues to invest like this with a 10% step up year over year, you can make a corpus of around 4.5, 4.7 CR. If this is considering that you'll have to withdraw 40-50 lakh for the short term, which is relatively shorter term goal in 10 years. Now with the left of the money, you'll not be able to compound whatever money you have taken out. So considering that, if you can increase your step up after that from 10% a year to a 12% per year, then the overall corpus with the time of retirement can be around 5.5 CR, which can very well suit your goals and requirements at that age.
Okay, all right. Well, we've already got our phone lines ringing. We have Mr. Japesh Thakur calling us right now from New Delhi. Japesh, hi, good evening. What's your question?
Hello, ma'am. Good evening to you as well as to the expert. Thank you very much for accommodating my question.
It's our pleasure.
This is with regard to today's subject only, the ESG fund.
Yes.
Now, ma'am, I wanted to understand on a theoretical level that how different is this concept from two other concepts which are quite popular within the industry. One is called, the ethical fund.
Okay.
Which, if I recall correctly, is something called, Sharia compliant.
Yes, the
fund.
Sharia compliant, yes.
Yes, exactly. And the second is, I think ICICI Pru had come out with a concept called special situation fund.
Okay.
Say, they are looking at something like, say, a Brexit opportunity. If there is a Brexit, which are the companies which would benefit from that? Or if there is a corporate tax rate cut, which kind of companies would be benefited from such a move? So is the ESG very similar? Is it just, old wine in old bottle?
Yes. Well, yeah, Japesh, sometimes...
Light on that.
Yes, sometimes, Japesh, this can also be a marketing trick. So I'm glad you took that phrase, Many a times, a lot of companies tend to give it names just sort of to attract new investors. Like you mentioned, the ICICI Prudential Special Situations Fund, but, that essentially wanted to catch the opportunity available when markets crash, when there are adverse events like you caught on right, like Brexit, among many other events that have taken place. So, he's rightly caught on. There's the Sharia funds, then there are these ethical funds like ICICI. We also have retirement funds, by the way. So then there are special children plan funds. So essentially, Harsh, theoretically, how does an ESG fund differ from all of this?
Yeah, so very good observation, sir, and good question. Just talking about the Sharia fund and the ESG fund, so just want to clarify. So Sharia funds are the funds which are investing in the companies where the core income, the core profits is not coming from an interest income. Because in certain religions and certain people may not prefer to earn profits from earn interest income. They would want to have it from the operations, like company running, making something, selling, making a profit on it is okay for them. Just keeping the cash or lending the money, getting an interest on that is not okay for them because of certain reasons. So those are the funds which are actually not investing in such companies where the core income is coming from the interest income. While ESG funds are basically, it's a set of companies that a fund manager would want to invest in, ideally based on the investment strategy, minus the companies which are not qualifying in terms of environmental or social or governance regulations or the the rules of the country or the worldwide. So there is a difference in philosophy, there is a difference in the way funds are selected, and there is also a difference in intent how an investor should look at these funds. Yeah.
All right, Japesh, I hope this has cleared any doubts you may be having. Okay, do we have time for one more question? Okay. No, unfortunately, we don't have any more time, so we'll have to call it a day on this edition of Ask the Money Show. Thank you so much, Harsh, for joining in on this very interesting topic of ESG investing, and I hope it benefits all of our viewers. I hope it's educated them on a new investing avenue, a relatively new investing avenue, if they want to be responsible towards the environment and other factors as well. Okay, on that note, we'll take a very short break right here on the show, but when we return, we are going to be talking about the new rules applicable for your credit and your debit card. So all of you owning a debit and credit card, which I'm sure many of you do, stay tuned and all eyes here, because we are going to get you an introduction to all of these new rules. Stay tuned.